Hi, good evening. This is James Shug with Westpac London's end of day report for Tuesday, January the 17th. Much more to report today than yesterday, when of course we had a holiday in the US. Mostly positive economic data actually started in China. GDP growth in China did slow, but not by as much as had been expected, and that, along with a little bit of a tweaked monetary policy by the Chinese authorities, has given markets a real lift, a real sense that the Chinese slowdown is going to be manageable, and that there will be actual policy easing from the Chinese to prevent a deeper than necessary slowdown. And that's good for equity markets, good for commodities, and so on. So that pervaded the whole mood of trading today, but there was other news as well. In Europe, the European Financial Stability Facility, the current bailout fund that's being put together, the rating of that, the credit rating of that, was downgraded from AAA by Standard & Poor's, as they suggested would be the case if any of the European sovereigns lost their AAA, which of course did happen on Friday last week. So no real surprise there. We saw the German ZEW survey of analysts post its biggest ever rise. Analyst expectations in Germany, they survey about 280 economists and investors and so on. It posted a very sharp jump, a bit hard to explain. The survey was taken between the 2nd and 16th of January, which was a period, I suppose, where perhaps European concerns were softening just a little bit. Probably eye of the storm, but nevertheless, it certainly seemed to have given those Germans that were surveyed a feeling that maybe the worst is behind them. We'll have to wait and see on that one. Also on the data front, in the UK, we had inflation fall back quite sharply. We're looking for inflation which is now down to 4.2% from 4.8%, to approach the 2% target during 2012. May even fall a little bit below that. In the US, we saw the New York Fed Factory Index for January. It posted its third straight rise, and there was some real solid detail in there too, related to orders and shipments and jobs. So a sign that there's still some momentum in the US industrial sector, at least, heading into the new year. On the corporate news, in America we had Citicorp, disappointing result, but Wells Fargo, a very positive result. So a bit of a mix of reports out of the financial sector there, which has seen some diversity in terms of how financial stocks have performed in the US today. That's probably about it in terms of the main news today. In terms of markets, it's just going up to 6 o'clock in London. The FTSE is up 0.65%. The miners, of course, have done well because of not just because of the China story, but also because Rio Tinto reported increased output in the latest quarter. The French market up 1.4% today, and the German market up 1.8%. And the Dow, still trading of course, up 0.8% at the moment at 12,525. Bond markets, not too much change there. The European peripheral bond markets like Italy and Spain yields are pretty much where they were yesterday. So no big excitement in those markets. In commodity markets, mostly positive today. Again, a lot of it related to the China story, with copper prices up 2.2%. Oil prices up 1.7% at $100.37 a barrel, and gold prices up gold price at $1,655 an ounce. That's up 1.5%. The Aussie dollar's not much changed against the euro. It's at 0.815, or that's 81.5 euro cents, which is about where it's been for the last day or two. A bit stronger though against the US dollar at 1.037. That's about it really for today's markets. Things to watch for tomorrow in Australia. We're putting out, along with the Melbourne Institute, the January read on consumer sentiment, and there's also going to be auto sales figures. So a little bit of local data to give direction to markets. All right, that's it for today. I'll be back tomorrow.